Hey guys, Tony Denaro here. Welcome back to the channel. Thursday, March 30th, and we have some updated news on Bed Bath & Beyond. I want to take a couple minutes just to go over that with you so that you have a non-hopium, fact-based read on the filings. I have been providing occasional coverage of Bed Bath & Beyond. I am not in this play. I got out back here when Ryan Cohen sold. I had fortunate timing to get out on the day he sold or the day before, I forget which. I have not been in the play, but there are people in my Discord that are still interested in this ticker. Some of them are in it, and it is not on my recommended list, but I do want to provide you with my read on the filings and what to expect. Let's jump right into it. As you can see from the top right of the screen, the news today was not good for Bed Bath & Beyond holders. The price dropped 26% in a day, down to 59 cents. And for the more optimistic YouTube channels, I'm sure this was a price that they thought they would never see. For those like myself who have a more non-emotional attachment to this play, this is not surprising, unfortunately, because of the massive amount of dilution and the upcoming reverse split. One of the big issues with a lot of the data out there right now is that people have been in just denial that dilution is going on. You can see that it says the shares outstanding on the brokers is 116 million. Ortex says the same thing. We did get an update on that today from Bed Bath & Beyond in the filings, and we'll get to that in just one second. Let's look at the Ortex real quick. Up here in the top left, Ortex is showing shares outstanding 116 million. I imagine that based on today's filing, both Ortex and the brokers will be updating the shares outstanding in the next couple days. On the short interest right now, this number is probably not going to be correct in light of the updated shares outstanding, but it is showing today 58% with a cost to borrow of 153%. I do not doubt that that 153% is correct. I do have some doubts in light of the outstanding shares being updated that maybe this very high short interest percentage of the free float might be incorrect. It might be too high. We'll find out in a couple days, so stay tuned for that. I know there are also some people that are excited that Bed Bath & Beyond is on the threshold list. Indeed, it still is. However, I would just give my normal warning on that. This is not something that I report on because I have found it to be a very unreliable indicator of anything meaningful. I would caution you that if you are getting information from people on Reddit, Twitter, or YouTube that are excited about the threshold list, that they obviously are ignoring the hundreds and hundreds of examples that we watch every year where nothing happens. And this is just not something worth getting excited about. As we move into a very quick overview of today's filings, I just want to go back to the last 10Q and reference right here where it says the outstanding shares was 117 million. That is what is reflected on the brokers. Based on the filing today, the updated number of shares outstanding is 428 million, not 117 million. There was also in this filing today some preliminary guidance for the fiscal 2022 fourth quarter, which will be reported at the end of April. We got an update that they are anticipating net sales of approximately $1.2 billion with the continuation of negative operating losses. Why does that matter? Because if we look on the income statement from the last quarter that they reported, the total revenue was slightly above 1.2 billion. It was 1.25, and that gave them a net income of minus $392 million. You can expect that these losses may increase in the fourth quarter, which will be reported in a couple weeks. The other thing that's worth noting is that this is just a continuation of the trend of the sales getting smaller and smaller, the gross revenues declining. And so Wall Street is going to look at that negatively when they're deciding what they're willing to pay for the stock. As far as the filings themselves, I urge you, if you're considering an investment in Bed Bath & Beyond, which I do not recommend, that at least you read through all of these filings. I'm going to give you a very high-level pass so that we can keep this video as brief as possible. Okay, running through these at a very high level, keeping it as fast as we can. On March 30th, the company entered into another waiver and amendment on the restated credit agreement. As part of that restated credit agreement and that amendment, the total revolving commitment, or the amount of credit they have available to the company, was decreased from $565 million to $300 million. And the letter of credit under the revolving credit facility was reduced from $225 million to $175 million. A lot of the credit that the company has access to through these facilities was tied to inventory, and as the company is closing stores and reducing inventory, these credit facilities are being reduced. It is probably also tied into the fact that the company is having some financial problems. Less risk for the lenders. Moving on to the next item, there was that February 7th deal for convertible preferred stock. That is being ended, and they have come up with what they call an exchange agreement. So instead of the warrants that Hudson Bay was going to buy, they're getting an exchange of 10 million shares of common stock and the right to receive another 5 million shares upon shareholder approval of a reverse stock split. Third item in today's filings, there's a new 300 million ATM or at the money offering through B. Riley Securities of common stock, and that will be sold into the market or through negotiated deals. Now, I know people get some funny thoughts in their heads when they see the phrase at negotiated prices. I've seen this happen in other companies. People see this phrase and say, well, the shorts must be desperate for sales and the company's going to stick it to them and sell these shares for a premium, $5 a share, $10 a share. Guys, this is not what that means. We need to get these kind of hopium thoughts out of our heads. The negotiated prices are going to be at or near the current price of the stock on the day that the sale happens. The company intends to use the $300 million proceeds, if they're successful in selling all of that, to repay outstanding revolving loans under the ABL facility, and they will be required to apply all net cash proceeds received from the issuance and sale of the securities in this offering to repay those loans. Fourth and final item in today's filings, they are also setting up a common stock purchase agreement with B. Riley, in which the company will have the right to sell to B. Riley up to $1 billion of newly issued shares of the company's common stock. As typical in these type of agreements, the company from time to time will say, hey, we need some cash. Do you want some shares? We're going to give them to you at a prearranged discount, which is covered in this filing. And B. Riley cannot own more than 4.99% of the outstanding shares of the company's common stock. So in these type of agreements, B. Riley will buy it at a discount and then immediately sell it into the market so that they are not going over that 4.99% cap. All of this, everything in here, guys, is dilution. What is the good news out of all this? The company is trying to take action to have money coming in to avoid bankruptcy. What is the bad news? We're going to go through the risks that they outline to investors at a very high level, but to boil it down, if you are buying Bed Bath & Beyond at current prices, you are going to still be faced with massive dilution. There is a reverse split that's going to be coming up soon for a vote. I expect that to pass. And you have a company which is on the verge of bankruptcy, and that verge of bankruptcy combined with the reverse split and the dilution usually don't go very well together in terms of what my expectations would be for the price of the stock. If you are playing this stock, if you are buying Bed Bath & Beyond, I would urge extreme caution. I think there's going to be plenty of time if you like Bed Bath & Beyond and want to take a chance, rolling the dice on a recovery play, that they don't go bankrupt or that they get bought out by somebody. I think that you have a good chance to be able to buy it much cheaper than today's price. As far as the risks, let's just run through them. If the company does not receive proceeds from the offering of securities covered in this prospectus, that's the $300 million, we expect that we will likely file for bankruptcy. Number one, don't ignore what the company's telling you. Number two, the issuance of securities in this offering will significantly dilute the ownership of existing shareholders, and the market price of our common stock will likely decline significantly as a result of sales of these securities into the public market. Again, guys, I don't care what anyone's telling you. Do not ignore what the company is telling you. Risk number three, investors may experience future dilution as a result of the committed equity facility. That is that $1 billion that was also signed with B. Riley. The next risk that the company wants to point out to you is that they are at default under their credit agreement. There is an amendment and a waiver on that, although at any time, if they fail to comply with everything in the amendment, all of that debt could be accelerated. This will cause an immediate Chapter 11. Next risk, the company's borrowing capacity under the credit facilities depends on the value of their assets, as we talked about a few minutes ago, and the committed amount, even though it's been reduced, of the credit facilities might not be available to them. Next up, the company may be required to file for bankruptcy protection even if the offering of securities covered by this prospectus are fully consummated. This next one is important. A lot of the deal today signed is contingent on the reverse split being approved by the shareholders. When the reverse split happens, the number of outstanding shares will collapse, but the number of authorized shares is still high, and the company is relying on that reverse split to free up all those shares to sell all of the new shares in today's filings. And they are telling you right now, if the reverse split does not happen, if it's not approved by shareholders, we expect that we will file for bankruptcy. And the final one that I'm going to point out, I know this is a lot of bad news, but it is important that you at least have someone read you the things you need to know if you're considering holding or buying this company. Our recurring losses and negative cash flow from operations, as well as our current cash and liquidity projections, raise substantial doubt about our ability to continue as a going concern. There is substantial doubt about our ability to continue as a going concern for the next 12 months. They are working on a transformation. There is absolutely no guarantee that they will make it. I know you guys probably know that. I just need to do my due diligence in sharing the information because there are plenty of people that are never going to show you this information. I'm going to wrap it up with that. Good luck to you if you are in Bed Bath & Beyond or if you're considering buying it. I do not have a position in this. I don't plan to. I know a lot of you are expecting a deal with other companies or Carl Icahn. I wish you luck. That would be something that could make this stock move. So there's always a chance. So Tony, you're saying there's a chance. Guys, anything can happen in the stock market. Don't ignore the risks. Don't overcommit your capital. Always keep things in a risk-balanced perspective when you are going into these plays, because this one could easily go to zero. I am Tony Denaro. Thank you for watching. Please like and share this video, even if it's not the message you wanted to hear. I do my best to give the information to you, and I will see you on the next video.